Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another jam-packed daily cryptocurrency market update. I'm wishing you all a wonderful weekend. And as always, if you are new to this channel and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because we drop an update just like this one every single day at 1 p.m. UK time to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And yesterday was a very significant day for the broader markets with the release of the non-farm payrolls numbers. And we will be investigating them, looking at the effects that they've had on the markets, and of course, the forward guidance that has now been given in regards to the probability of rate cuts. And going into 2024, we did say that people were getting a little bit overzealous, a little bit more excited than perhaps they should do in regards to the amount of rate cuts that are happening this year. And we've seen ultimately a big readjustment of that. First of all, with inflationary prints that came out in Europe, the US, and then, of course, the UK. And now with a stronger than expected market, or economy, I should say, which means that Jerome Powell doesn't really have the reasoning to take his foot off the brakes or put his foot on the brakes, certainly when things are as strong as they are and inflation is still somewhat elevated. Of course, we looked at PCEs and how that's basically where the Fed's target is. So we're going to be covering all that. Again, that kind of macro headwinds and readjustment all took place around Bitcoin's resistance level, which we are now hoping is going to form that right shoulder, which could see Bitcoin go to 150K, which is going to align with our macro thesis. Also where we think the dollar's going. Of course, the dollar was affected yesterday. So we're going to be talking about all of that. We're going to be looking at what's happening with Celsius. We know Celsius went bankrupt. They're now kind of out of bankruptcy and planning to restructure. We'll be diving into that a little bit. But I want to start this video off with a clip from Bill Miller, who is a very well-respected Wall Street guy, very good friends with Stan Druckenmiller, talking about Bitcoin and kind of how he sees it and where he sees it going. I think this is somebody that at this point has 50% of his net worth in Bitcoin. Let's dive into that.
There's only going to be that many of them. So all you have to really believe is that the demand for Bitcoin will grow faster than 1.5%, over the next number of years, and the price inexorably will go up. So I've only recently been allowing myself to be described as a Bitcoin bull. I used to tell people, they say, "Oh, you're a Bitcoin bull. You own a lot of Bitcoin." I'm like, I do own a lot of it, but I'm actually a Bitcoin observer, and I'm observing its trajectory as a new technology and comparing it to the trajectories of things like the printing press, or the steam engine, or the railroads, or the automobile, or electricity, and it's following that very not predictable, because it's not predictable certainly in the early days, a well understood path for the adoption of new technologies. And I think it was Stan Druckenmiller said earlier in the year that, and now he owns Bitcoin, by the way, but he said that Bitcoin was a solution in search of a problem. And what I've found amusing about that is every new technology is a solution in search of a problem. Because you have a new technology, then you try and figure out what you're going to do with it. And so, when we created the internet, what are we going to do with that? So the Defense Department had good uses for it, but it was tough for other people to see. But now everybody can see what the value of the internet is. Same thing with the internal combustion engine, which was very dangerous and all, but now that's taken over the world, and now we're going to move to electricity. So all kinds of technologies have to grow into their potential.
Extremely interesting. We like to show you guys interesting people talking about interesting concepts as it relates to the cryptocurrency market. And we do think that Bitcoin has spawned this technological revolution that, in the same way the combustion engine has engulfed all of our lives and it's the preferred method of transport, or the internet has engulfed all our lives, it's how we're communicating right now. There's going to be a blockchain element, a distributed element, a distributed ledger technology element in the future that we're moving towards. And that's why we highlight the amazing opportunity that the cryptocurrency market presents. And we made a video yesterday where we actually looked at and we're questioning the origins of Bitcoin and the story that we've been told. Now, that wasn't a hate on Bitcoin. I own Bitcoin. We've been long Bitcoin, and I'm one of the first back into Bitcoin in 2023. However, I am a little bit skeptical of the origins, and he mentioned that the military had a great use for the internet, and actually a lot of the internet and the kind of founding of it was propagated by the military industrial construct. But we're not going to go down that rabbit hole. Let's dive into what took place yesterday, of course. And yesterday was a very significant day for the markets, with the non-farm payroll number for the United States coming out. And the expectations for this was 187,000, and it came in nearly double and then some, at 353,000. So I was actually expecting a weaker or perhaps in line number with the expectations, given what we saw from ADPs earlier in the week. And I was expecting this to sort of lean on the dollar, but we got the absolute opposite. And when you're wrong on the markets, unfortunately, you're usually 180 degrees wrong. And that was the case yesterday for us in regards to the non-farm payroll. The interesting thing was Bitcoin actually held up relatively well. And we know the correlation here between the dollar and thus the economic information that will propagate and prop up the dollar and risk generally, certainly Bitcoin. And we'll look at that. I think gold was the real loser yesterday. Of course, why is all of this relevant? Well, this is relevant because this is all going to go in and affect rate pricing. And you'll notice, if we quickly look at Bitcoin, that going into this year, there was very aggressive and overly zealous rate cuts. I think it was 8 rate cuts for the United States, essentially starting to get priced into the markets. And we've had a readjustment from that. It also coincided with this neckline, or what we're calling a neckline that we think was going to act as resistance. We wanted it to act as resistance, ultimately setting up this right shoulder in much the same way we had a smaller inverse head and shoulders here that will ultimately take us to the 150 K range. So that's really what we're looking out for. The dollar on the flip side of this, we do think is coming to the lower end of this macro channel. And that will support Bitcoin. Also, we think this is in line with the macroeconomic environment where rates are at and everything of the sort. And we think the crash is going to probably come, 2025. We don't think there's going to be any kind of a landing. We agreed with Stan Druckenmiller and Larry Fink in regards to how they thought 2024 was going to go based on all the stimulus. But going back to yesterday's events, of course, this has really, again, knocked out the probabilities of rate cuts coming in March. And I'll show you that here. And you can see this was before this economic data, more in favor of a cut coming in March. We've said that's far too overzealous. You've now got the readjustment of that if you watch my last Sunday meeting. May, though, however, even though the probabilities have been somewhat lessened in regards to the first 25 basis rate cut, I do think that's probably right on line. And yes, we know a pivot from the Fed in regards to steeply bringing down rates is bad because there's usually a crash on the back end of it, which the yield curve will be predicting when we're watching for that on inversion on all 4 of them, not just the one. But ultimately, as it stands right now, typically the initial cuts will still see the markets do well, just like sideways rates typically mean that the S&P will go on and put a new all-time high, which is all factors into our kind of macro reasoning. So yesterday was significant. Not only did you have that, you also had a readjustment of the previous one, which was, I think, 231,000 jobs added in the last non-farm. They've revised that to 333,000. So very strong labour market. Again, Powell, if he still hasn't quite done the job on inflation, which is interestingly because true inflation would say that he's not just done the job, he's overdone it at this point in regards to their 2% target. The macro picture is continuously improving. And actually, I have a very good friend of mine that I went out for dinner with last night, who is a mortgage broker. And I said to him, basically asked him about how he was getting on. How busy are you right now? Obviously, surely with higher interest rates, there's not that many people that want to apply for a mortgage. And he said they've had a record January. So the usual narrative that's propagated by so-called macroeconomists, which really don't have a clue. Economists make the worst traders and the worst actual predictors of markets, in my opinions. But this kind of story that's been propagated, the doom and gloom story, is far from the truth. These people crying on TikTok are isolated cases. There's always gazelles and lions in the jungle. This is how things go. And the actual environment isn't as bad a one as people expect. And, we live in this monopoly world where they just print money, so on and so forth. So lots of things going on. Of course, we're still waiting for this to play out with Bitcoin. Bitcoin, and going back to the dollar, didn't really, the dollar, you can see the kind of effect here. This was non-farm payroll. The real loser for me was gold yesterday. So you can see, obviously, the correlation here, the stark correlation here, dollar up, gold. Generally for risk, if the dollar's up, risk's going down. You can see as the dollar gained that strength, gold was the real loser. It dropped instantly by about 1%. However, there's something we are watching for the dollar. We don't want this short-term downtrend to get invalidated in regards to the lower lows and lower highs. However, you do have a bit of an inverse head and shoulders here. And Bitcoin, when we drop down the smaller time frames, actually has the same thing. Can you see this? And this neckline of what could be a smaller head and shoulders is all pivoting perfectly around the key level of significance that we gave in regards to this inverse head and shoulders target. So there's kind of bullish structure on both the dollar and Bitcoin. And I guess it's going to be who's going to roll first. And even the S&P is doing really well on the back end of a strong dollar. So even though it's a general rule of thumb, dollar up, Dixie up, risk generally headwind against. There are anomalies in that, and I do think you're seeing that at the moment. And certainly we have altcoins like Chainlink, which is very much following our plan. I mean, this is following our plan beautifully and a kind of broader testament to some of the patterns that we look at and then playing out. You know, you can see beautiful candle breaking that neckline now. You're going to new all-time highs for Chainlink. So to move on to the final kind of bit of news, as we've been rambling on for quite a while now, you did have news yesterday in regards to Celsius. Now, Celsius has successfully emerged from bankruptcy on January the 31st, 2024, concluding the company's restructuring process. You can read our official announcement here. I'm going to leave a link to this in the description because I know some of you may have been caught up in the whole Celsius nightmare. Celsius has now begun to distribute over $3 billion in cryptocurrency and fiat to creditors. I don't think this is going to have any effect on the price, by the way, guys. Certainly, if people thought they weren't going to have any crypto because they'd lost it Celsius, now they've got it and we're in a bull market, they're not likely to sell at this point, or I think they'd be dumb to do so unless they need to. So settlement claims with key stakeholder groups and consummate the previously announced mining co-transaction, resulting in a new Bitcoin mining company that will be called Ionic Digital Incorporated, supporting efforts to maximize recovery for the benefit of creditors. So I don't think it's a massive amount of actual customers that are being paid, more the creditors and the kind of bigwigs, as it always is in these cases. They get their money first and you're always last in the bankruptcy filing court. But they've avoided bankruptcy, which is interesting, certainly a turn and a plot twist. Celsius expects to provide further information regarding the distribution process in the coming days. Additionally, eligible creditors will receive common stock in the Ionic Digital under the Mining Co. transaction, as stated by the plan. Celsius extends its appreciation to its customers, employees, advisors, and partners, and their support throughout this process. So very interesting. This is the actual official report. And it talks about a number of things. You know, it talks about how the SEC is involved and trying to speed things up. Kind of contradictory. You know, the SEC is wanting them to give out crypto, even though they're saying crypto is a security. And it's very interesting, I think, this whole thing. A little bit of a quote here. It's today, over 18 months after Celsius paused withdrawals, we began distributing over $3 billion of cryptocurrency, fiat, and stock in Ionic Digital to Celsius creditors. And perhaps good for Celsius holders and people who own and were victims of Celsius participants. And that's really all we've got for you guys. So we've still got a little bit of macro headwinds, although Bitcoin kind of somewhat bucking that. Non-farm didn't really help the case for the dollar rolling in the short term. We'll have to see where the dollar gets to. There is some potentially short-term bullish structure, but Bitcoin holding well despite that. Gold, not so much. Remember, we are bullish on gold, the stock market, and we're getting lots of small stocks that are setting up and entering stage 2, which is our uptrend. And we ultimately think that Bitcoin is an uptrend against those markets. We've looked at the crosses, so we think Bitcoin's going to do even better. And we've got technical, macro, and everything in between reasoning behind that. Also, altcoins on their own merit look fantastic. Bitcoin dominance going to roll. Lots of things we didn't cover, but you guys know the plan. Stick to it. On that note, I'm going to love and leave you. If you've enjoyed this content, like us, appreciate it, as a comment, and I hope to catch you all in the next one. Thanks for watching.